President Trump is vowing to buy a Tesla after the company's stock plunged.
Welcome back. Tesla shares are on track for another down week, losing about 6% since Monday. That could extend its record losing streak to 9 straight weeks, dating right back to the inauguration. And that, plus protests at dealerships around the country, is even getting the White House.
Tesla, once hailed as a symbol of technological innovation and environmental progress, is now facing an existential crisis that has rattled not only its investors, but also the entire electric vehicle industry. In just a matter of months, the company's stock has experienced a dramatic 53% drop, plummeting from an astronomical $1.54 trillion to a mere $635 billion. This collapse signals a severe shift in investor sentiment, and it's becoming impossible to ignore that Tesla, once seen as the future of the auto industry, is now teetering on the brink of a major setback. What happened? Why is this company, which was celebrated for leading the charge in electric vehicles, now struggling to maintain its ground? The roots of Tesla's fall are intertwined with a complex mix of external pressures and internal challenges. The tariffs imposed by the Trump administration are a major factor contributing to the company's declining fortunes. Tesla relies on a global supply chain to manufacture its electric vehicles, sourcing crucial parts from Europe, China, and other regions. The escalating tariffs on these imports have increased production costs significantly, forcing Tesla to raise the prices of its vehicles. For many consumers already grappling with inflation and rising costs, a more expensive electric car becomes an unappealing option. This is especially true for the Model 3 and Model Y, two of Tesla's most affordable and popular offerings. The price hikes, combined with the reduced purchasing power of American families, have put the company in a difficult position. But tariffs are only part of the story. Tesla is also facing growing competition from both traditional automakers and new entrants into the electric vehicle market. Companies like Volkswagen, Renault, and Stellantis are all heavily investing in electric vehicles and rapidly expanding their product lines. Volkswagen, for example, has boldly announced plans to become the largest electric vehicle maker in the world, which is a direct challenge to Tesla's dominance. In Europe, Tesla has already seen a sharp decline in market share as local brands offer more competitive pricing and better after-sales service. With more and more consumers opting for alternatives that offer similar or even superior features, Tesla's once unshakable grip on the EV market is loosening. The competition doesn't stop there. In China, Tesla faces the added challenge of rising nationalist sentiments and growing demand for homegrown electric vehicles like BYD and NIO, which are offering electric cars at significantly lower prices. This new wave of competition threatens Tesla's position, especially as it navigates the political and economic tensions of the trade war between the US and China. In summary, Tesla's decline is not just about external market forces, but also its own inability to adapt quickly enough to a rapidly changing environment. The company's failure to diversify its customer base and address pricing pressures leaves it vulnerable in the face of fierce competition. If these challenges continue unabated, Tesla's dominance in the electric vehicle space may very well become a thing of the past. While Tesla's troubles are significant, they're just the tip of the iceberg. The larger picture is that the US economy is facing an unprecedented crisis, one that is shaking the very foundations of the nation's economic structure. Over the past few years, the United States has been hit with soaring inflation, rising consumer costs, and an economy that seems increasingly out of control. For the average American family, the dream of financial security feels more like an unattainable fantasy. Prices for gasoline, groceries, and basic household goods have skyrocketed, leaving families struggling to make ends meet. Despite Trump's promises to bring down inflation, his policies appear to be having the opposite effect. The stock market has taken a massive hit, and the value of the US dollar has declined sharply, further exacerbating the economic malaise. On March 14, 2025, the US stock market lost $4 trillion in a single day. This wasn't just a minor setback. It was a massive financial collapse, with investors fleeing the market and shifting their capital into US Treasury bonds in search of safety. The impact was felt immediately, with major industries like automotive, construction, and consumer goods reeling from the fallout. The core of this crisis lies in Trump's trade policies, which have exacerbated inflation by raising tariffs on goods imported from key trading partners like China, Canada, and Mexico. While the administration claims these tariffs are designed to protect American industries and curb illegal goods, the reality is that they are having the opposite effect. These tariffs have driven up the cost of raw materials and finished goods, pushing prices higher and widening the wealth gap between the rich and the working class. Trump has also made promises about reviving American manufacturing and boosting economic growth, but the evidence suggests that these goals are largely unfulfilled. The automotive industry, in particular, has suffered greatly. Ford and General Motors, two of America's most iconic manufacturers, are facing massive financial losses, with Ford projecting $5.5 billion in losses and GM forecasting $6 billion in losses over the next year. As these companies struggle to adjust to the new economic realities, they're forced to lay off workers, which only deepens the pain felt by American families. And it's not just the corporate sector that's struggling. Ordinary Americans are facing a financial nightmare. Unemployment is rising, healthcare costs are escalating, and wages remain stagnant. This is a perfect storm of economic mismanagement, and its consequences are devastating for those who can least afford it. But the economic turmoil isn't just confined to the United States. The international fallout from Trump's trade wars is already becoming painfully apparent. Countries like Canada and China are increasingly growing wary of the U.S.'s economic policies, and these tensions are leading to serious consequences for both sides. Take Canada, for instance. Prime Minister Justin Trudeau has made it clear that Canada will not sit idly by as the U.S. imposes unilateral tariffs on its goods. In fact, in direct response to the 25% tariffs on Canadian imports, Canada has imposed retaliatory tariffs on $155 billion worth of U.S. goods. This represents the strongest trade response Canada has ever made against the U.S. The impact of these tariffs is already being felt. In Ontario, a key province in the Canadian economy, the government has slapped a 25% tariff on electricity exports to the U.S., which could affect over 1.5 million homes in states like New York and Minnesota. If these tariffs remain in place, Canada has warned that it could take further steps, including a complete power cutoff to the U.S. This is just the beginning. Other Canadian provinces, including Nova Scotia, have also retaliated by blocking U.S. trade. Nova Scotia has even gone so far as to remove American liquor from stores and ban U.S. companies from bidding on government contracts. This is a coordinated effort to hit back at the U.S. for its economic aggression. But Canada isn't the only country feeling the heat. China, which has been at the center of Trump's trade war, is also looking for ways to respond to U.S. tariffs. The ongoing tensions between the two largest economies in the world have raised fears of an all-out trade war that could have devastating effects on global markets. The bottom line is clear. Trump's aggressive trade policies are not only alienating key allies, but also pushing the U.S. toward an economic isolation that could have long-term consequences for its standing in the global marketplace. Perhaps the most concerning consequence of this crisis is the way it is affecting the very people who supported President Trump's policies. The working-class Americans, particularly those in rural communities, are feeling the pain of these economic decisions more than anyone else. In the past, Trump promised to revive American manufacturing, bring jobs back to the U.S., and end the era of outsourcing. But the reality has been much different. His trade wars have led to job losses, increased costs, and a sharp decline in local economies. Many of Trump's most loyal voters, from farmers to veterans, are now grappling with the consequences of his policies. They're facing rising costs, losing healthcare benefits, and watching their communities fall apart. The hard truth is that many of Trump's supporters are no longer benefiting from his promises of economic prosperity. In fact, they are now bearing the brunt of these reckless economic policies. For example, the agriculture industry has been decimated by retaliatory tariffs from countries like China and Canada. Farmers who once relied on exports to sustain their livelihoods are now struggling to keep their businesses afloat. In addition, the energy sector is facing rising costs as tariffs on energy imports increase. Many small businesses are closing their doors as consumer spending plummets. The very people who once believed in Trump's vision of economic revival are now seeing their dreams of a better life slip further away. As the economic situation worsens, one big question looms over the future. Will the U.S. economy collapse? The combination of rising tariffs, market instability, and increasing global tensions has left the U.S. vulnerable to a full-blown recession. The stock market collapse in March 2025 was a wake-up call, a clear indication that the economic foundations of the country are crumbling. The situation is only exacerbated by the trade war with key allies and adversaries. Canada's retaliation, along with the ongoing tensions with China, has sparked fears of a global economic meltdown. If these trade wars continue, the ripple effects could lead to widespread market instability and deep recession, both in the U.S. and worldwide. President Trump's economic strategies, if left unchecked, could lead to permanent damage to the U.S. economy. The constant shifts in trade policy, coupled with rising inflation, job losses, and reduced consumer spending, suggest that we are on the brink of something much bigger than a simple economic downturn. As the world watches, the question remains, will the U.S. adjust its course before it's too late? Only time will tell, but the stakes are higher than ever. Tesla, once considered the shining beacon of the future of transportation, is now grappling with not just financial instability, but a growing public backlash. The company's recent struggles have been compounded by protests against its CEO, Elon Musk, and his controversial leadership decisions, both in business and politics. These protests are not just happening in the U.S., but are beginning to resonate internationally, further escalating the tensions surrounding the brand. On March 22, 2025, a group of approximately 100 protesters gathered outside a Tesla dealership in Washington, D.C., to voice their frustrations with Musk's leadership. The protests were fueled by his role in overseeing the downsizing of the federal workforce under the Trump administration. Many protesters blame Musk for contributing to the loss of over 100,000 government jobs across the country. The demonstration was peaceful, with protesters waving signs and chanting in unison, but the message was loud and clear. Musk's influence on government policies is not welcome. This was not an isolated incident. Similar protests have erupted in other U.S. cities, including Los Angeles, and have spread internationally, notably in Toronto, where Canadians have expressed their anger over the recent increase in tariffs on U.S. goods. These protests reflect a broader sense of dissatisfaction with Musk, particularly among those who feel that his political influence, combined with his leadership of Tesla, is making him a symbol of corporate greed and political overreach. The protesters weren't just upset about job cuts. Many were also concerned about Musk's political affiliations and the role he has played in pushing conservative agendas, including government efficiency measures that have targeted federal workers. These policies have drawn sharp criticism from those who argue that cutting public sector jobs hurts the very people who serve the nation. Some of the protesters even called for boycotts of Tesla products, adding an economic dimension to their political grievances. Musk's recent decisions are alienating not just consumers, but also investors. Tesla's stock, which had once soared to record highs, has almost halved from its peak in January 2025, adding to the growing uncertainty around the company's future. The current political climate, with escalating trade tensions and tariffs, is also having a direct impact on Tesla's bottom line. With the company already dealing with the fallout from the US-China trade war and increasing competition in the electric vehicle market, these protests have only added fuel to the fire. But not all news is bleak for Tesla. On March 24, 2025, it was reported that Tesla's stock price surged after investors began to view the company's low stock price as an opportunity. Some analysts believe that the potential for tariff relief, especially in the form of new negotiations or exemptions, could provide Tesla with much-needed breathing room. This has led to a renewed interest in the company, with some investors speculating that the lower share price could represent a temporary dip before a new wave of recovery. The reality is that Tesla's fortunes are currently in flux. Tariff relief could ease some of the pressure on production costs, which would allow Tesla to maintain competitive pricing in a highly volatile market. However, it remains to be seen whether this potential boost will be enough to offset the growing public distrust in the company's leadership and the mounting pressure from its competitors. As protesters continue to gather outside Tesla dealerships, it's clear that the company's relationship with the public and its future trajectory will depend on more than just financial recovery. It will take a rebuild of trust in both its products and the people at the helm. In the coming months, Tesla's ability to navigate this growing divide between corporate policy, political controversy, and financial performance will determine whether the company can maintain its position as the leader of the electric vehicle revolution, or whether it will be overtaken by newer, more politically neutral competitors. The stakes are high, and the outcome remains uncertain. But one thing is clear: Tesla's path forward will be shaped not just by its technological innovations, but by its ability to address the growing political and public resistance that is now threatening to derail its momentum. As we wrap up this analysis, the question remains: can the U.S. recover from this crisis? The trade wars, tariffs, and economic turmoil have shattered trust in the government and led to widespread public disillusionment. The American people are demanding real change, and if the administration doesn't act swiftly, the consequences could be severe. The clock is ticking, both for the U.S. economy and for the people who trusted in its promises. Will the country unite to tackle these challenges head-on? Or will the crisis continue to deepen, threatening the very fabric of the nation? Only time will tell. But one thing is certain: the stakes have never been higher.